Hi there everyone, I hope you guys are having a good weekend. Last week was phenomenal for us. The weekly plan did what it does every week, that is give us actionable locations to participate in the trend, and it did so again this time around. We got to participate at the pivot level 49.57.62 for a nice long, and then again we got an opportunity to participate at 49.97 5008, which was marked as our decision making zone. So two amazing locations to participate in this 100-point rally seen last week. Now, of course, in the weekly plan, I've already walked you through how you could have participated, how you could have thought. But again, for those of you who've subscribed for the EdgebyRS Academy, the idea is to give you deeper insights to enable you to truly connect with the markets, right? So I'm going to cover 6 topics today. So this is going to be a pretty lengthy recording. I estimate, again, no idea, but it could be 30 minutes, give or take. So be prepared and review it when you are fresh. So the first subject is going to be the essence and character of the P-shaped profile. The second topic I will talk about is the ongoing bullish pattern. The third is how I refined the weekly decision-making zone from 49.97 5008, which is 11-point range, narrowed it down to 5003 and 5006. The fourth thing I'm going to talk about is how to tackle long periods of consolidation, something that I understand a lot of traders struggle with. And these consolidations that I'm referring to happened at 49.57.62 on, is it Tuesday, I suppose? Yes. And 49.97 5008, which happened on Thursday. The fifth topic I'll talk about is the importance of 5018 from here on, and the last subject is going to be Friday's rally was obvious, right? But why do I say that? What made it so obvious? Now that is something I'm going to dive into during this recording. All right, so let's get started with the first topic. Give me a moment. There might be some few seconds of silence as I switch screens, but just bear with me, please. All right, so this is your profile on, what was it? On Wednesday, where we witnessed a gap up and breakout of the 2-day balance, which is the 2-day balances 49.37 and 49.78. Now, this breakout resulted in a double distribution. Now, this is something a typical profile trader would observe. And why double distribution? Because it is split by one set of single prints. So you have the lower distribution from the bottom of A all the way here to the bottom of the single prints at 49.99, and then you have the upper distribution from 5002 all the way to 5000, I would suppose 18 or 19. So this is what a typical profile trader would look at. Now, how I looked at this profile was actually a P-shaped profile. Now, why do I call it a nuanced P-shaped profile? Is because I split this profile where I eliminated period A, right? You can see the split right here. I have removed period A, and this is now B. And this is what I'm observing. And as you can see, the shape is a P-shaped profile. Now, a lot of you who may not be so familiar with the with profile shapes and etc. Types, it's very simple. A double distribution does occur on trend days, and so does a P-shaped profile, right? P. But why do I want to observe this P? Because what the P tells me that this is a possible short covering rally. So as you can see, we broke out of the balance, gapped up, and we rallied straight into 5014 and then started to consolidate, thereby forming a P-shaped profile. Now what the P tells me as a character of the P-shaped profile, what it tells me is any acceptance above this is a squeeze, whereas the double distribution doesn't indicate that to me specifically. Can I anticipate that? Yes. Can there be a look below and fail, look above and fail? Sure, but nothing tells me in specific that I have to expect a breakout or a squeeze. But a P shape does tell me that, because what it tells me is the shorts, the sellers are in trouble, the buyers have taken over, and if that is the case, then we could see a continuation. That is what it tells me. A double distribution doesn't talk about continuation to me. So it's very important to follow this shape, P shape, and there's a B shape as well. Now, for the P shape, I've actually written a post on Substack, which is available to all you guys. So make sure you read that to better understand. And again, of course, if you have questions, I'm pretty much open to answering them. So again, what do we know with this P-shaped profile? That any acceptance above the top of the P can result in a squeeze. Now, this is something I've been talking to all my members since Thursday, that anything above 5018 is a squeeze. And that's pretty much what happened on Friday when we squeezed for 30 points. So now answering that question, why was Friday's rally obvious? It was obvious because we held 5018, the top of P, the value area high, the IB high of that day, which is in a cluster of 3 points. We backtested it during RTH and held it. And how do I know this has strength? Because period B, which is the next 30-minute candle of the RTH session, formed a higher low. So I already know this is acceptance. This is Friday, and we know Fridays have been bullish. How do we know Fridays have been bullish? Look back, at least what my memory recollects right now, from 19th Jan onwards. Every Friday, we've seen a rally. It's either a breakout of balance or it is a rally within the balance. And in this case, again, it's a continuation of the breakout is what we are observing. So again, you want to observe that Fridays have typically been positive, been green, and you don't want to unnecessarily fade, especially when we are talking about a breakout and acceptance above the most important P-shape profile. All right, so I hope you guys understand why I chose P to guide my decision making as opposed to relying on double distribution profile. Okay, now the second topic that I'll talk about now is the ongoing bullish pattern. There you go. Okay, now what we've been observing is, since the FOMC and the CPI, what we're observing is that ES has been in a large balance here. Now this is large both in terms of the number of points, about 113, and even in terms of time, right? Literally a month. So a month-long balance, 100-point balance. So what that follows with is a breakout, rally, balance again. What's this balance again? 48.72 and 49.34. Balance followed by another breakout. Now this was a failed breakout, so we came back in, FOMC dumped lower right to the edge of the balance, held, and again broke out. Now that breakout had a perfect retest again. Okay, it did not touch the top to the tick, but at least got pretty close, 3 points short, but it got there for another retest. But what followed thereafter? Another small mini 2-day balance and another breakout. So now you've got two patterns to observe. The first that I just spoke about a few seconds back is Friday, right? So let's observe here. You've got, this is 19th, Friday breakout, another Friday right here, 26th, another rally of sorts to the top of the balance, of course. Then again, you've got another Friday right here. This is the NFP Friday, if I'm not mistaken, and another rally and breakout. So now you've got again another Friday, 9th Feb, where you see another rally. So the patterns are pretty clear to us until this pattern doesn't break, which is basing, balance, breakout, balance, breakout. This pattern needs to change. So, or you observe for a change of character on Fridays, where Friday actually either ends neutral or red, where it actually dumps. Now that is going to be a first sign of change of character. Now, that's not only it. Because you understand now the importance of the P-shaped profile, I would say even a failure of that P, which is 5018, should give you enough awareness that something has changed, which means we could rotate all the way to the bottom of the P-shaped profile, right? Let me take you back to the P-shaped profile. Bottom of the P-shaped profile down at 5004. Fail that, and we are going all the way to fill that gap. So essentially, you have two locations to participate to at least fill this gap at 49.78. Is one on the failure of 5018, second on the failure of 5004, 5003, 5006 region are your two good solid locations to target for a 30 point, 35 point move lower. Now, of course, if we are if our weekly plan is able to catch a much higher time frame resistance next week or the week after that, then probably we are even more well positioned. But remember, until this P does not fail, there's absolutely no reason for you to be outright bearish. Okay, now this is where you start becoming cautious. But where you actually know that things have really changed is on the failure of this balance, because this is the first time we broke out, but we had a massive breakout rally which failed to find traction, and we broke back in. And once that happens, you know we can observe for a rotation lower. So that brings me to my next point, that is observe how every breakout should technically retest. So right here at 48.34, we did not retest post breakout, but every other balance has done that. We broke out, retest, retest, retest. Now this is another breakout, which means we are observing for either a higher time frame resistance or the failure of 5015 to really initiate that rotation all the way down to 49.78. Fill the gap, backtest the balance. Now once this balance fails, you know the drill. So this is your ongoing bullish pattern that I was talking about. Next, refining the weekly decision making zone. Now this is very, very important. And the reason it is important, because realize when I shared this decision making zone with you, it was literally on a blank canvas, right? Price has never traded there. There is no MGI available. But using the fundamentals and application of market memory, I was able to identify a 10 or 11 point range. But what will MGI allow me to do is narrow that range down. Now let's observe the factors that were present that allowed me to narrow that range. And this is something that is available to all you guys, but this time I'm going to tell you where and how to look for these clues. The first clue is always going to be the London close. Sorry, before that, it's the period B halfback. Now, why is period B halfback very important? I've covered this piece in my earlier recording. You want to view that, but just a quick recap, because this is the breakout candle. This is the candle that has strength. This is the candle which is 20 points odd wide. So this is an important candle, not period A, because it is a 10-point narrow candle. Okay, it's as simple as that. So period B, the halfback, is at 5003. Okay, so that's the first clue, that 5003 is important, which lands right in middle of 49.97, 5008 decision making zone. Second clue that's available to us is the London close. It's very important. You've known that. I've spoken about it before. I actually talk about it in multiple recaps, even on Twitter. So you already know London close is important. And what does it mean is very simple. It's a pivot. It's a guide. Okay, which tells you that just follow the London close, the direction of the London close. So if we are above the London close, you typically want to be long, and if you are below the London close, you want to be short. Of course, we need to have the awareness that we cannot short into any potential support which might be few points lower, or we cannot go long into a resistance which might be a few points higher. In this case, the London close so happens to be within my range of confluence. Again, it closes at 5006. Once again, in between 49.97, 5008. So we've got the period halfback, confirmation 1. We've got the London close, confirmation 2. Confirmation 3 is the afternoon pullback low, which is at 5005. Now, I don't track the afternoon pullback low for every session, but I love to track these references, especially when there's a breakout or a trend seen on the day, because those afternoon pullbacks actually give me an indication of short-term buyers again stepping in or sellers stepping in depending on the direction. So in this case, it was buyers stepping in at 5,005 again within our decision-making zone of 49.97, 5,008. So thus, you know the importance of afternoon pullback lows. Now, this is what you saw on Wednesday. So as we headed into Thursday, I informed my members that now we've got, just a second, just give me a second. All right, this is the chart. So this is where I updated my members on Thursday. I'd suggest 5003, 5008 is an important pivot to gauge, and gradually, of course, during the day I even narrowed it down further to 5006. So I was very clear that we could narrow down the range. I used all that MGI that was there that allowed me to narrow a 11-point range into a 3-point range. So this is where you want to start thinking, okay, he's given us 11-point range. Now that's a guide. How can we narrow it down and make it actionable, right? And this is how you go about the process. And this is what I do every single time. Now, this was further solidified, strengthened, when we had the London low of the following day, which is Thursday, exactly at 5,004. Again, within the same region. Again, we had the US pre-market low. So now you go by session, right? So I've spoken about in my earlier recording, which I've already shared with you guys. There are a few sessions that I track. It starts from Asia, London, US pre-market, US Open, and then London close. So again, another session US pre-market holds the same level. Extremely important. And what happens on the same day? London again closes within the zone at 5006. Now this is two back-to-back London closes at 5006. Now this is when you're like, okay, this is strong. I can't short this. I shouldn't short this. And what happens? You see a end of day rally. Again, very simple. You want to observe all the factors. Same thing here, right? Let's observe the IB range, right? Look at the IB range here. The low is exactly at 5009, which is right within our decision-making zone 49.97, 5008, which means even the break of IB should not result in you shorting, because it is not giving you a direction, because it is going right down into my pivot, into my support zone. So you cannot be shorting into my support zone. All that IB break is doing is allowing you to get a better entry, and that's about it, because there are a lot of traders who tend to trade with the direction of the initial balance. Now there's a problem with that. Only if you truly understand what I just explained to you, the confluence around session, the confluence with my weekly decision-making zone, the narrowing of the ranges. You know, when you bring everything together, the entire story together, the bottom of the P-shaped profile, right? That is also at 5004. So there you go. You're like, oh my God, this is the bottom of the P. This is where the value area low is. This is where there's London closes. This is where we've got the afternoon pullback low. This is where we've got the London session low, the US pre-market. When everything has come together, you're like, no way I'm shorting into this zone. I'll short on a break of this zone, or I just want to be long because buyers are in control and we are still holding this goddamn pivot. Now, we're not just holding this pivot. For folks who are familiar, and most of you should be, with the list framework, we've got the perfect 4 steps confirming each time that this zone is holding. Therefore, there's no reason for you to be short, even though there is consolidation ongoing. I'm going to come back to this consolidation bit in a while, but again, we see a nice end of day rally ultimately. Now, consolidations. Now, this is a very important topic. A lot of traders typically struggle with consolidation, because what happens, such chop that we observed at 49.57, 49.62, and then again at 5,003, 5,006. Now, such chop, what it does is, It feeds your bias, where you are like, oh, this zone is unable to hold, so let me short because this is going to break, because this is not giving the rally, this is not having that impetus, that strength. Wait, that is where you are wrong. Now, while that could be true in certain circumstances and not something I'm going to talk about in this recording, but it is important to understand the preceding structure. Why are we consolidating? What happened the day prior? Now observe what happened the day prior, right? We had a nice rally. Friday was a breakout, NFP breakout Friday, which means a day or two of consolidation is not surprising. It's very normal. It's normal for markets to behave that way. So when markets are consolidating, but in that consolidation, they're holding the most important level. What does that tell you? You still want to remain long. And precisely what happened on Tuesday. Now observe, during that period, right? It's not just my pivot, which I shared with you 2 weeks ago when price never traded into 49.57.62. So you've known this pivot. I've even explained the importance of this pivot in last week's weekly recap. But let's see today, right? Today as in on Tuesday. What do we have at this region? Again, I spoke about this a while back, the confluence that is built at a certain zone. Same here. What's the confluence here? At 54.55, we've got the London low or the EU low. We then have the IB low. So you see, you first have the EU low, which happens anywhere between 8 a.m. to 1 p.m. London time. And then you've got the IB, which happens during the first hour of the US RTH session. So now you've got two session lows at the exact same pivot. And now you also have the list framework confirming this is a long. More so, okay? Let's add this now. Now start thinking. Sellers are trying to push through. Each time they rip, they find resistance between 68 and 70, exactly where London closed. Now, it takes me back to the first topic that I spoke just a few seconds back. London close, and you go with the direction of the close, correct? Now, right here you observe it flushes lower. Now, do you short? No. Like I said, you don't short into support even though that is present. So what do you use London close as? As a validation to your long trade. But it is not a place to short, because then you're shorting into the EU low. You are shorting into the IB low. Not just that, okay? I'm just going to take you back to that profile chart. Just a second. There you go. Now observe this profile chart, which is 2nd Feb breakout, right? Again, I think this is the NFP breakout we had. Observe the value area low. It is right at 54. And where is the value area low of the 2-day balance? Exactly at 56. So now, not only will you be shorting into, just a second, wrong chart. Oh, yeah. Not only will you be shorting into the EU low, IB low, etc. references for now, and my pivot, you're also shorting into value area low. You can't be doing that. That's not how we trade. We look for edges to go long, and this is where you start exploring a long. Now, when you are long here in this zone, the good thing is your stops are pretty much visible to you, right? 5 points under, 7 points under, break of EU low, break of IB low, done. I am out of this trade and I can flip my position. However, if this is holding, given the backdrop, because it's preceding by a NFB breakout, we know this consolidation is a likely scenario. Now there you go, you have a breakout, nice little breakout, end of day. But observe, we break through the London close. Wait, before I take you through, observe here, 68 and 70. Each time sellers stepped in, now this is how you want to think. If sellers stepped in at 68.70, once, twice, and both times they are unable to break through the zone, let alone breaking through, they're not even able to form a lower low. What does that tell you? It tells you they have no impetus. Their bullets are weak. That means that buyers will take control, especially after wasting hours in trying to push price lower. And there you go, you have a nice little breakout above London close. Now this is where your second clue developed. Observe, post London close into Asia, into London Open on Wednesday, what do you observe? It is holding this golden level, London close. There you go. That's your hint. It's going to break out. This is going to rally, right? Now, if you could get long, well, if you miss this, this is this second opportunity to go long. Of course, this is only when you understand the entire context is when you can enter here, or else my zone is, of course, your best bet. Now, again, we have a pre-market breakout brewing. We capped up. Again, observe, breakout, we start to consolidate. This is when we formed a P. And then what followed the subsequent session on Thursday? Another consolidation. Again, this is the same consolidation where 90% traders were like, oh, breakdown. Wait a minute. Why breakdown? We are holding the bottom of P. We've just squeezed. This is a gap up. Buyers are present. This is strong. Nothing has said it's weak. Now again, let's observe here on Thursday. Where's the IB low on Thursday? It is exactly at 5,009. Now what's 5,009? At the edge of my decision-making zone, 49.97, 5,008. So what does this tell you? You can't short on the break of IB. You have to go long. Why? Because it's shorting right into my pivot, right into my zone, which has multiple confluences. You cannot short. This is where you are looking to go long. Okay, so this is how you tackle long periods of consolidation where you understand the backdrop. And again, if you see there's a clear resemblance of backdrop, Friday, Monday breakoutish. Sorry, Friday breakout, Monday and Tuesday consolidation. Again, this Monday pullback, we called for it. I was very explicit in my plan that we will retrace this NFP rally. We pretty much did, not all the way to the bottom, but about 80% is what we did retrace, which is pretty good. Consolidated, breakout, consolidated, and again broke out on Friday. Now, before I get to this, what even made this the importance of 5018 and how this breakout was even very obvious is the fact that these are the factors, these are the elements you want to track. IB period, London range, London close, apply the list framework, understand the backdrop of the consolidation and the structure. When you understand all of this, you are in a much better position to participate and with confidence. You know it, this is going to consolidate and nothing unusual. I'm going to just show you something. Just give me a moment. Right here on Discord, 5 minutes before the session kick-started on the 8th, which is Thursday, I was like, typically post yesterday's breakout, a consolidation cannot be ruled out, and I would be very selective with my trading. In fact, I see no reason to push for a trade. We'll stick with the edges as shared in the plans posted. And there you go. You exactly know my edges. My edges is nothing but 5,003 and 6 because it's the bottom of the P. It is the value area low of Wednesday. It is where we have tons of confluence in form of all these elements that we discussed. So again, engage, and there you go. You started rallying. Again, observe. Sellers kept trying to short from prior day's IB high, which is Wednesday's IB high. They kept trying. But each time they tried, they failed to form again. No lower lows, no breakdowns, and they kept hitting, kept coming back, wasted hours, ultimately a very, very similar action where towards the end it spiked up marginally, of course, but again it did rally into the close, something we saw on Tuesday. Now, this is your clue. What happened on Wednesday? Breakout. So what is going to happen on Friday? It's brewing a breakout. I wouldn't say a breakout because it's still under 5,018. Now this is where the magic happens. 5,018. We see a textbook breakout, right? Some news driven, but observe, we have the EU low right here. Again, I've spoken about how important the London low is. Now there you go. We have the EU low exactly at 5,018. We have the CPI update of sorts. Again, we rally, flush. But what happens? The event candle, right? Let me just walk you through. There you go. the event candle low is exactly at 5018. What have I taught you guys about the event ranges? You want to follow the event range. Now in this case, period A back tested pretty much the top of P-shaped profile and defended the event candle low, defended 5018, which is P top, which is the value area high from Wednesday. It defended all those levels and ultimately started to stage a rally. And this is when you knew, oh my God, this is repeating what happened on Tuesday, Wednesday is happening on Thursday and Friday. So guys, this is how I was able to anticipate what was about to happen. I used MGI, I used the market structure, I used what's important is my understanding, and is why this is lengthy, because I've repeated a few points, is because, like I said in my earlier video as well, markets are less about levels but more about how you see the development, how you deduce that development, and accordingly how you execute. So please watch this clip if it warrants at least twice, because the same structure will come into play, and I can tell you this with assurance, will come into play when things turn. And when I say turn, that is turn to the downside, of course. And when they do, you will start seeing similar patterns coming through, but this time to the downside. So you won't have a P shape. Maybe you will have a B shape, right? You will have the same balance rally, balance breakout rally. You'll have the same thing, which is balance, breakdown, balance, right? Maybe it'll reverse the entire same structure. These balances will again be very, very important moving forward. But again, you are watching for what happens. Same consolidations might take place, but not this time at support. This time they may do so at resistances. So again, like I said, this clip is just not about what happened this past week. It is about teaching you, educating you about the nuances, about how to watch the development. And once you have a good grasp of it, of course, it doesn't happen overnight. It took me a very long time to learn these things. But once you get a hold of this way of thinking, the way of watching the development, then trading by default becomes at least a level or two simpler. So I hope these 30 to 33 minutes have really added value. Again, if you guys have any question, please email me, send me a direct message on Twitter, or if you guys are on Discord, do so. I'll be more than happy to help you. So you guys have a good weekend, and I'll see you all on Monday. Take care. Bye-bye.